Welcome back, everyone, to Stocks to Watch. I'm your host, Ashley Berry, as we gear up for the Top Shelf Partners Commodities Global Expo, happening October 20th to the 22nd in Fort Lauderdale, Florida. We're bringing you exclusive pre-event interviews with key industry leaders. Dan Sauer, CEO of Vertical Petroleum Industries, is with us, a private company at the forefront of petroleum exploration and production. We'll discuss their approach to sustainable energy practices, how they're navigating the evolving oil and gas landscape, and what attendees can expect to hear at the conference. Welcome to the show, Dan.
Thank you so much, Ashley. I appreciate the introduction. It makes me sound beyond my years.
You need to give yourself more credit. So, Dan, really curious. Maybe you could introduce us to your company. Also, what sets you apart?
Well, where do I go with that? Let's start with, let me introduce it first of all. As you said, I have a company called Vertical Petroleum Industries. We are located out in Oklahoma. We're in Ardmore, Oklahoma is our primary office. We've been drilling wells since 2016. We've done, I think we're approaching 70 some wells now drilled, and we own probably 2 to 3 times that as far as different leases that we have and what we have under our operation as we speak right now. I think what probably separates us in the industry from what most people are probably familiar with, I think a lot of people are, when they think of investing in oil and gas, Ash, I think they think of publicly traded companies. You know, in my portfolio, I've got investments in, Gulf Coast, or I've got in ExxonMobil, Chevron, most of the big boys. And we all do. It's usually part of a package, or at some point, there's a lot of people that have invested in oil and gas, but not specifically in oil and gas. One of the things that sets us apart, we are a privately held company. Mm-hmm. Now, there's some significant differences in that. One, you have a lot more directive and a lot more control over your particular investment as an investor. And we're going to go into each one of these, I believe, probably specifically, but as an investor, the biggest advantages, I think, and what sets us apart from what most people are thinking is 3 things. One would be, well, let me say this. One is the profit margin. What you can have an unbelievable potential profit. But then as soon as I say that, a lot of people think, there's also a lot of risk involved. So I want to talk about that. And I want to talk about what we've done to mitigate that risk. But then the big attention, or the headliner that a lot of people get, is the fact that when you invest in private oil, it is a 100% tax write-off. The IRS right now has allocated for energy, specifically in oil and gas exploration, that if you invest into exploration in the oil and gas sector, it is a 100% write-off. And so that changes everything. All of a sudden, when people can move money from, something they've got in their portfolio over into energy sector, specifically exploration in oil and gas, you can write that amount off, which is like getting 30-40% back the very first year. And that's a game changer, so that catches a lot of people's attention. And then, of course, when you couple that with the chances of making a pretty good, return on your profit, as well as, as long as we can mitigate the risk, that's also, then it's game over. And then lastly, I think probably the thing that most people like about you're not just watching stocks go up and down. What you're doing in this case, we literally have, because you are involved directly with the project, we've all seen it. We've all been driving down the freeway. You see those pump jacks going up and down. Well, if you are part of that particular project, literally the oil producers, they pick up the oil on a daily basis, and every month that gets paid out. So we literally get those dividends paid out monthly. So you're getting monthly returns. You have a great tax write-off I'll go into a little bit more in depth on how the tax write-off works. And then the profit can be just incredible. And that these things will usually go for years. A lot of times when we've set up a project like this, it's not uncommon to see these wells last 20, 30 plus years. So it's significantly different than investing in ExxonMobil,
That's what I was going to mention is the longevity and absolutely incentives galore. So I'd love to hear more about really how it works. I think for those that are watching, how do these tax incentives work? And you also mentioned mitigating risks. Specifically, what are you doing?
Well, again, because we're a private oil company, we select as a company. One of the things that I personally do is when projects are brought to us, I have many projects brought to us, and I have essentially a checkbox of a list of things that I'm going to look for before I select a particular project. I don't always select the ones that's got the highest profit potential, because sometimes the highest profit potential also goes with the highest risk.
Mm-hmm.
So, because just so you know, I invest in every deal that I do, just like my partners. We will go out, and so I'm usually the first investor in. I've got an absurd amount of money in every one of these. So when I'm going through and selecting, and this is how I will mitigate the risk, is because what I'll do is, and there's a lot of different you can drill offshore, you can drill big horizontal projects. I have pretty much concentrated on vertical projects. The reason why is because they're pretty simple to do. They're a lot less investment. Sometimes that would mean a lot less return, but for me, it's all about percentages. It's money in, money out. The big boys are concentrating on these big monster projects, and the thing is what you don't read about is a lot of times if they go on a fail, there is hundreds of millions of dollars, and it didn't hit. I cannot do that. I can't sustain that. So, I will only go, first of all, to mitigate the risk. I'll only go into proven areas. I'll only go into proven fields, which means we will work with all the latest in testing. We'll go in and we'll find, seismic testing and satellite imagery. But in addition to that, I also want well data, which means that I go in, there's wells being drilled all around me. So I kind of look at it pretty simplistic. I mean, if everybody's drilling around me and everybody's, hitting oil, so should we, and it gets a little bit more difficult than that. But that's essentially what the well data is. So I will, first of all, it'd be by the selection of wells is what we've done. Now, I also only select areas that not only did they have a good track record of hitting, but a lot of people will go after where there's a big reserve and they'll go down and you either hit or you don't. I don't do that. What I'll do is I will go in where a lot of the formations that as you drill down, a lot of times there's multiple formations. I'm not looking for that one big payday at the bottom. I'm looking for multiple pay zones as you go down, because that way, if you don't hit your target zone, there's some great backup plans as all the way going down through. So even if you don't get what I can show when we get into specifics, what can be, almost too good to be true returns, there's some backup plans where rarely do you come up and not hit anything at all. And for example, the project I'm doing right now, 4, 5, or 6 pay zones in a project is remarkable. I'm doing a project right now with 13 different stacked pay zones as you go down, and we just hit total depth here just a couple of days ago on my last well, and we've hit about 6 of them as we went down. And so those are the projects that I like to go after, because it really does mitigate the risk, and we can control that. And you can't always do that with a publicly traded company.
Yeah, it certainly sounds like a sage strategy, especially when you're talking about the pay zones in particular, because you never know. So, as you said,
Just so you know,
plan.
yeah, just so you know, I'll refer to them as pay zones because I'm all about the money's out and money's in, right?
Sure.
But they're different formations. So these are formations that we can actually look up and see the history of them and what. And so I only go into areas which are some of the most profitable and historic formations in the state of Oklahoma. We drill anywhere from North Texas to North Oklahoma. And, so the last year or two, we've been doing extremely well up in Oklahoma. And, that's what we look for.
Sure. And let's briefly touch on the tax incentives. What are you hearing from those that are investing in your company? What about the returns? How can you inform others about the appeal to this?
Well, probably it's definitely one of the headlines.
Yeah.
like I said a moment ago, as I was setting it up, this isn't anything new. These tax structures have been around for the last 30 years. And the reason I like to always bring that up is because I don't want people to think that, we might lose it as it changes administrations, or this tax strategy that we've had, because, it's not going anywhere, I guess is what I'm saying. But basically what it says is, the top one is the fact that the initial investment is a write-off. So now it's not all the first year. Typically, you'll get about 80% of the 100% write-off. About 80% comes the first year, and then the 20% gets amortized over the next few years. So, but you do write off 100% of it, which is really, really attractive to a lot of people. If you can imagine moving, I'll use a round number for math. If you take $100,000 and you move it from where you have it, if it's not doing really well for you right now, literally by just moving it over into that sector, $30,000-$40,000 depending on the individual, sometimes can come back the very first year, which is, I mentioned, it's a game changer. Now that's not the only tax. There's several tax advantages. For example, there's also another one. It's under a depletion rate, but it's called the small producers tax credit. Now, the small producers tax credit allows for, now let's vault a little bit in the future. Now you've invested in oil, it's already working for you. We've drilled, tested, we've completed the project, and now we're all making revenue. And we get revenue paid every monthly. And so at the end of the year, you make X amount of dollars in revenue every year. There's also the small producers tax credit allows 15% of that. You only pay taxes on about 85% of that money. You get 15% of all of your revenue is tax-free. And, people, say that again,
Yeah.
So I'll say this. So depending on how much you have in the project and how much you're making, whatever it is, 15% of that is tax-free. So what a lot of people will do as a strategy then is they'll take X amount of dollars, they'll move it in, they'll be making revenue throughout the year, they'll take 15% tax-free, they'll take the rest of it, reinvest it into another project, write that off, and then now they've got even more revenue. And as more and more projects get put in the ground, they start getting more and more tax-free income. And so it's a tremendous strategy, and people have been operating it for years, regardless of which side of the aisle you're on.
Yeah, I like how you bring that up. It's sort of like bipartisan, right? Like it's not either side. It's been around for a very, very long time.
Exactly. I do have the opportunity to speak to large groups of people, and on both coasts. And a lot of times when I get on the East Coast and the West Coast, I'll be talking in a very in an environment which is very green friendly and very, they're kind of like not very pro oil. And I'll remind them that many people, from the left invest in oil, not just because and I want to just disregard the political ramification of it for a minute, but everybody knows, and I don't care what side of the aisle you're on, everybody knows that it's not about whether it's green energy or not. This is a lot more than just fuel. We're not talking about whether it's going to pass, for gasoline powered, cars versus electric cars. Oil goes for everything. Anything. Oil is needed for, many products, medicines. You will a variety of different things that you're going to need for petroleum. So it's not just but you need it for our economy. It requires us to drill oil. Our national security depends on us being energy independent. So everybody can agree with that, whether they want to talk about it during a speech or not. Everybody agrees with that. So everybody has a tendency to be involved in it as well. So anyway, that's why the tax advantages are very safe. They've been around for years and years and years. They need people investing in oil, and they need private companies like us to be drilling oil.
Absolutely. And we want to be dependent on what's happening right here on US soil, of
That is
course. So,
exactly correct.
yeah. And it's about the future growth in the energy sector. So, Dan, I'll just ask you quickly, for those that are watching who are considering potentially attending the conference or investing in your company, what would be your pitch to them aside from all of this amazing information that you've already shared with us?
Well, that's a great question, because it's pretty general to say, I'm investing in oil and gas. Well, first of all, you'd say, oh, okay, that's good, but are you investing the right way and with the right company? Are they taking all of the right? My approach to this from the very beginning was never from the oil and gas side of it. It was from the investor side of it. I started this company in 2016, and I always make a joke about in 2016 I couldn't spell oil. I don't. That's not that's not my background. My background is more finance. It's more real estate. I started by literally investing in oil and gas. I kind of caught wind of some of the things that I'm talking about, and I wasn't in it very long before I heard the right guy, and I said, well, how much would it cost if I just bought the lease? And so I bought a lease, and we started putting some oil wells into it, and I brought some partners involved with me, and it did very well. And then I did it again, and that's how I got started in the business. So I would say that the biggest thing I've got going for our company, and we've had massive growth. We started as very small, and now I'm 20, 30 times the size of most of my competitors, in a local area. Now that being said, I would say that for the same reasons as I've gone before, why would you want to invest in private oil? Well, it's because of the tax advantage. Why would you want to invest in anything? It's for the profit margin. We haven't really touched on that, but the profit margin can be incredible. And I've done everything I can because I know what it's like to have to invest and put money at risk. And so I've done everything I can to mitigate that risk by selecting the right projects and not swinging for the fence every time. A lot of times I'm okay with a single or a double, because the rate of returns on that can be remarkable. So I'll go through that with the investors and why we do what we do. And then it really comes down to a comfort zone, because most of my investors I look at as partners. We get to know each other, and a lot of times they'll see exactly what's going on a day-to-day basis. So
yeah, which really reinforces your approach, as you said, investor approach. Also, the vertical approach, which I really appreciated you mentioning earlier for Vertical Petroleum. Right. And folks, this is just a glimpse of the companies and conversations you'll experience at the Commodities Global Expo, where industry leaders will share their insights on the future of commodities and mining. You can check out the conference website at topshelf-partners.com. Daniel Sauer, CEO of Vertical Petroleum Industries. What a pleasure it was speaking with you. I look forward to continuing the conversation at the conference.
Ash, thank you so much. I really appreciated it. You're wonderful to interview with. Thank you so much.